Okay, so third-party payments, real estate brokers, that's the main subject of the day. And this has been coming up a lot. I actually talked to one of our 97 and up members, Mark Enzi, who is based in Texas and deals a lot with real estate people. And we were having a conversation where we were both kind of surprised how frequently brokers, let's say agents get paid out of title. And it happens often enough, right? It's not normally the case, but it happens often enough where, so the agent's working for the broker, the agent closes a deal, the home sells, the commission goes through title, and the agent's paid directly out of title. And so the net amount after the agent is paid is what funds into the broker's account. And the broker just wants to record that as their commission and ignore the fact that they really earned a lot more than that and paid the agent, and that they have to 1099 the agent. Most brokers understand better, but there are a surprising number who don't. So this came up in terms of how to deal with the accounting on it. And of course, I work directly with a lot of realtors. It's one of my areas of specialty. And recently, while I was answering somebody's question about how to deal with this, it just hit me that something that I ended up sort of borrowing from how I do accounting for the e-commerce world comes into play and works very nicely here. And really what it came down to was, in this one case, I was emailing with the person. And I was frankly looking for a way in our email exchange that was efficient and easy enough to explain while I was just in an email. And then it occurred to me, you know what, this is actually a better way to do it than I've taught in the past. So I'm going to show you exactly what that process looks like. But just for a little, excuse me, for a little background and sort of context, first of all, plus I want to show you a little, on a side note, a little something here. I'm going to share my screen in just a second. I just wanted to get something up over there. Okay, so over here is kind of my outline, and just keeping it very simple. And keep in mind, there are a lot of other things that can be paid out of title. If the realty is a franchise, they might be paying royalties to the franchisor. There's all kinds of stuff that can be paid. And even if it's not paid out of title, I think the process I'm about to show you is just a great way to deal with anything that kind of comes out of the broker's gross commission. And by the way, this could be for an agent too, where the agent is the primary, but they're subbing it out to another agent who maybe actually help them close the listing. So there's other use cases, or for what I'm showing you today. And notice I've got this outline in ClickUp, by the way. I've noticed that when you're in a task, if you go to add an attachment to a task, there's now an option for adding ClickUp's own version of a document, and that's what you're seeing exactly on my screen. So it's pretty cool. I had sketched this out in Google Sheets and copied and pasted this little table in so that I could lay this all out clearly. So that's the side note part of this. Anyway, so there's a lot of things that could be dealt with this way. Again, the royalties might be paid directly out of title. There's any number of things that, when for whatever reason it's decided it gets paid out of title instead of by the broker after they receive the funds, where this is going to come in handy, right? So here's the use case. The selling price of the home is $1.5 million. The broker's commission is 4%, but 80% of that goes to the agent, right? So it's 80% of the $60,000, or $48,000 goes to the agent. And so the broker only ever sees $12,000, because the assumption here is that the title company has paid the agent directly, right? But the broker still has to recognize $60,000 of income and $48,000 of cost of goods sold, is what I like to call it, on something like this, netting them to $12,000. So the bottom line is the broker has to recognize all of the income, and the agent's commission needs to be tracked for 1099 purposes, right? We need to 1099 the agent at the end of the year on this. So let's go to QuickBooks Online and see what this whole thing looks like. And as always, I like to show you, I've got a trial balance with nothing but a starting balance in the account. So we're starting nice and clean and clear. And let's go record an invoice to pick up the sale. Actually, we could do a sales receipt. Let's do a sales receipt. We don't need to do an invoice. There you are. Okay, so let's see. We'll just do some customer. Okay, we'll get rid of the email. The date of the sales receipt should be the closing date. When did the listing actually sell? So on the client's HUD-1 or closing disclosure statement, their final, whatever the date is of record that the property sold, that's the date you'd want to use here. So let's just say that was April 1st. Ignore this. I've got custom fields in here for property management. You could use properties, which are really locations in QuickBooks Online to track this. But I like to use the customers to track the actual listings, which I don't have this particular company set up to track that right now. But it's not important for this. So the first thing is we'll go down here, and for the product or service, we'll have like real estate sales or something. Right, I just create a generic item, and we'll set that up. We'll call it a service item, and we just need it linked to a commissions income account. Right, so I'll add that in. Income, service or fee income. Save and close, save and close. Okay, the quantity is where we're going to put the selling price of the home, right? I've taught this a million times before, so $1.5 million. And then you put in the commission rate, which for the broker was 4%, generating our $60,000. And of course, that's not taxable. So this is a handy way in case any of you who are watching this haven't seen me teach this before. It's a way that we can track what the home sold for in QuickBooks, because we can get that quantity to show up on reports, so we can see all the listings, what they sold for, what our commission earned, and of course we can get our gross calculation of the commission out of it. Right now, previously what I did to deal with the third-party payments was to add in additional line items here where I would put in the 48,000 as a negative, but I figured out, really, it just hit me a much simpler way to do this. And like I said earlier, I'm borrowing something from e-commerce. Oh, look, I finally have tags. I've been waiting for when I would get that. And what I'm talking about that I'm borrowing for e-commerce is the idea of a clearing account, right? Why not just deposit the gross commission to a fictitious bank account? We'll call it commissions clearing or something, right? So let's create a new account, and it'll be a bank account, cash on hand, whatever. Right, so we're going to dump the whole $60K in there. And I'll just say yes to the missing class fields. So now I have $60K showing up in commissions clearing, right? And now all I have to do is record a check or an expense, right? All right, the payee will be the agent. Agent X, we'll call it. Okay, and that has to be set up as a vendor, of course, because we need to track it for 1099 purposes. And the payment account's going to be that same commissions clearing, right? Now over here, the category is going to be some kind of a commissions expense or cost of goods sold account, right? So I need to create a new one. And we'll call it commissions paid. I usually like to call it, commissions paid for this, because we want to make sure we're distinguishing the commissions that are income that the broker earns versus the commissions that we pay, which I like to classify as cost of goods sold, because I like to see the gross margin directly against that, right? Where's my cost of goods sold? There you are. Okay, and we'll just call this other cost of services for the detailed type, not really that important. Okay, now the commissions paid, and we could do it as item details too, by the way, but and that's only if you need to. I don't think you really need to. I think for this, we know that the broker's commission is 48,000, which, by the way, it's really good to have something like this sketched out when you're recording this stuff so that you can quickly refer back and see, what everything was. What I might do is, put in the description that this is 80% of gross commission on XXX property. Right, and again, normally I'd have the customer tracking turned on in here. I could have sworn that should have been turned on. Oh, here it is. Okay, so here's where you would put the listing, right? So did I even say what the property name was or anything in here? No, just generic. So you'd associate it with the customer. Let's do that real quick, and I'll go back and actually the customer was some customer, right? So normally we'd want to create a sub-customer underneath that called 123 Main Street or whatever the property address is, right? So let's just do that real quick, and I'll go back and fix the sale. Now the amount, 48,000. So again, we're paying this out of the commissions clearing, and watch what happens. Save and close, and yes. Now my commissions clearing has the $12,000, which is what's going to land in the broker's account. But before we do that part, Let me go back to the sales receipt and fix the customer, because we want this now going to the property address. And that's how I always structure it for the realtors, is we have the customer name and then the listings, because you never know, and it happens often enough where we have multiple listings from the same customer over the years. So this way we have a nice history and tracking of each customer and all the different listings we might have sold or bought for them. All right, so now that that's fixed, uncheck the email. So now again, my commission's clearinghouse of 12,000. Now it's very simple. When I get the commission from the title company, the 12,000 that remains for me, the only thing to record is essentially a transfer from commissions clearing to the Wells Fargo account. So here I'll just record a bank deposit. Okay, and it's coming out of commissions clearing, right? It's going into the Wells Fargo account, right? And again, we can put in the description 123 Main Street net commissions received. Language is very important on something like this. We want to say it's received. It's not what was earned, right? What we earned was $60,000, but what we received was $12,000. So I'm very, very careful with my nomenclature on stuff like this to avoid confusion, and also to, well, mainly that, to avoid confusion, and then other implications that could arise from confusion, right? So, and under receive from, of course, we could also list the property here. Not that it's that critical, because this is just balance sheet activity. Nothing that's going on here is impacting the P&L. But now let's run a P&L, because now we've got the commissions clearing zeroed out, which obviously should always happen. This has to zero out. If it doesn't, we've missed something. So now let's go run a P&L. I'm in new transactions. Let's go to reports. Yeah, and of course, normally, because there would be other activity in the company, go away. We'd want to filter this for just Main Street, right? For 1, 2, 3. I don't know why it's not letting me do it. Oh, that's one thing I hate about this particular filter in this area, is you have to start with whatever the parent is. All right, so we'd run this way, and it shows everything perfectly. We earned the 60,000. We paid out the 48, right? And the 48, as you saw, is associated with the vendor version of the agent. Sometimes we'll put the agent in the customer structure as well, because we want to track the commissions earned on that agent, as well as be able to track the commissions paid to that agent for 1099 purposes. So a lot of times we have two versions of the agent, for when we want to track it that way. Meaning, in other words, if I go to my customer list, it wouldn't just be some customer. I might put the agent at the highest level, within that the customer, and within that the listing. So now I could track all the, all the income that agent helped me earn, right? So it's just a reporting mechanism. It's not critically necessary, and especially now with custom fields, and obviously the company I'm using here is QuickBooks Online Advanced. With custom fields, I could use a custom field to track the commission, income by the agent, right? I could just associate the agent that way, so I don't have to clutter up my customer list with that, number one. Number two, I could end up having the same customer with two different listings with two different agents, just depending, right? One agent may leave one day and another agent comes in and takes care of that same customer, right? So that was one thing I had always realized was a bit of a limitation on putting the agent in the customer structure, was that, again, I might get stuck either having to disassociate that agent from a customer, or having to create a duplicate version of that customer in the customer list to be associated with a different agent. Now, because of custom fields in QuickBooks Online Advanced, I can usurp that friction by leaving them out of the customer structure, and again, using custom fields to describe who the agent is that gets credit for having sold this. And I just got an email today that I don't know if we'll see it yet here, but they are finally rolling out the ability to associate custom fields with expense transactions. That hasn't been the case up until now. But I literally just got an email this morning explaining to me that, inviting me to kind of test it out and play with it. So I still haven't even gotten as far as to see how to make sure that's made available. But anyway, so that's the whole thing right there. Is, again, we record the gross commission, right, going into sales clearing, and then we just pay the agent out of that same sales or commissions clearing account so that we can pay them properly as a vendor and pick that up for 1099 purposes. And then the net to the broker is just a sweep from the commissions clearing into the main bank account. And that's my whole story, and I'm sticking to it.
So as I was talking with you earlier, I have a Zoom meeting with that potential client who, she's an agent for a family real estate, but then she has her team under her.
Mm-hmm.
So I can structure these transactions as recurring so that the bookkeeper who I'm going to train, every time they have a sale,
They can just use the template. Yeah.
they can use the template.
Yeah. Yeah. Because in that case, like I said earlier, the agent, the structure accounting wise is very similar to the broker because they're earning a commission and then paying against that. Right. And even if it's not being paid out of escrow, it's still not a terrible way to do it using the clearing account. Right. Because it just gives you a place to kind of park the gross commissions. And although in theory, it's an extra unnecessary step. Right. Because remember, the use case here is specifically that the agent's being paid out of title directly, which doesn't always happen. Most cases, the broker would receive the full 60,000 in commissions, and that goes into their bank account, and then they would pay out against that out of their own bank account. So the only need for the clearing account is to cover the situation where the full amount of the commission isn't going into the broker's account, right?
Okay, so can I bring up something that we've been bantering around for so long? Those costs of goods sold. Here we're putting it, but it's not traditionally cost of goods sold accounting. Remember, we had that whole discussion?
Right.
So here's a real estate agent or a real estate broker going for that loan. What's his cost of goods sold?
Yeah, zero, because again, we're only using cost of goods sold here for presentation and reporting purposes. It's not truly cost of goods sold by the definition of the word, right? I just want my P&L presented from my realtor this way because I want to be able to see, here's the commissions I earn, here's the gross profit is the difference, right? So it's just a reporting mechanism here.
I agree, I understand that, but then how do these businesses, and I know this is not the area for this discussion, again, a real estate broker going to apply for this disaster loan, then they have no cost of goods sold. They had $1 million or $5 million in sales. Okay.
Yep. It's, again, by the strict definition of what cost of goods sold means, and when I'm filling out a loan app with a bank, that's what I'm going to go by. There's no cost of goods sold for a realtor because they're not selling products.
Okay.
Right. It's just a reporting thing here. That's
I know.
all.
I just don't know how the SBA is.
They might come out with a different interpretation, but so far they haven't made that clear. And absent that clarity, I have to go by what I understand to be the strict definition of what cost of goods sold means.
Okay.
That's the way I approach it. And maybe that's the auditor in me being very strict about that kind of thing. But, oh, Greg's here. Hi, Greg.
Yeah, so for our internal reporting, and the business owner wants to figure out what their margin was, this is the way to do it.
Yeah. Yeah, and I mean, in theory, if it's in most cases, it's pretty standard. Like if the agents get 80% of whatever their gross commission was, but keep in mind there's also often a tiered pay scale. So a lot of times the agent will get X percent up until they've earned so much, and then the percent goes up afterwards. It's incentive to get them to want to work harder. So, but in theory, if there was no incentive, if it was just straight agents get 80% of the broker's commission, then you can check your work by making sure that your gross profit is always 80%, right? Or 20% would be your gross profit. Your cost of goods sold would be 80%, right?
So if there is a tiered, if that client uses some sort of a tiered schedule, then I guess you would create different items for your forms.
Well, you could
payout.
do it that way. I would be more inclined to just track it somewhere outside of QuickBooks. You know, you could run reports in QuickBooks to see which agents have met that threshold. And then, because you can still use the same items, just use a different rate in that agent's instance. You know, it's up to you. It depends on, you know, how you want to do it. But I'm not a, I don't like to add a lot of extra items if I can avoid it. So if it were me, I would track that outside. I would save some reports in QuickBooks so that before I go to record a deal, I just want to check and make sure what stage this agent is at in terms of their cumulative commissions. Keep in mind also, the cutoff for when that resets is not usually the calendar year, but it's usually the agent's, based on the agent's kind of hire date. That's usually how brokers that I've worked with track it, is if the agent was hired in July, then July is when their period sort of resets, and they have from July 1 of one year till June 30th of the following year as the time frame in which we track the commissions for purposes of whether or not they've met their thresholds for you know, for a higher commission payout. So, and so when you have those kinds of criteria that have to be considered, I'd probably rather use something like Airtable to track it and just run a report that shows me cumulatively, here's what the agent has earned since their hire date, which, by the way, is another use case for a custom field in QuickBooks Online Advanced that's date-based, right? Because then I can run reports with cutoffs based on that custom field. So I can see cumulatively this agent has earned this much commission. Did they go over the threshold? And if they just went over the threshold on this sale, then there's a good chance I have to split the calculation up between the portion of commissions that hits the threshold and then the portion thereafter, right? So there's always going to be that one sale that pushes them over the edge that you have to, it's even more detailed work, you know. And then I'd have something that kind of just marks them in Airtable probably that lets me know here's what phase they're at. And every time I record a deal for them, I might just update something in Airtable that shows me here's their cumulative as of the last deal. In other words, I would track it separately and then do the calculations each time they had a deal.
Okay.
But yeah, I mean, this was a simple one, obviously. But the main thing that I thought was cool was using the clearing account for things that are paid out of title. You know, and there's more things than just the commission. Like I said, there's going to be royalties in some cases. There might be other fees that are paid. You know, there can be a lot of little things. Anybody else have any questions? How many of you actually work with realtors, with brokers and agents? Lisa does. Lisa, your husband is a realtor, right?
And he just opened up his own brokerage firm. That's why I wanted to jump on this.
Oh, nice.
Yeah, to look at this, another way of doing it. And I guess, I mean, since we have a little bit of time, some agencies I know, they'll take their desk fees right out of their commission, or office use. I've seen people be charged for printing and different things.
Right.
And so, but you still got a 1099 on the full commission that they've been paid, but then there's deductions. I
Correct.
guess,
So when
let's just see how you do that.
So when you have deductions like that, first of all, obviously that has to get coordinated with the title company so that the title knows not to pay them their full amount. But those
actually, the brokerage firms, so the title company is giving their splits. It's the brokerage firm that then says, so that they've got the brokerage firm is giving the full, what do we say, 60,000 to the brokerage. Now the brokerage is going to do the split on the percentage that they've agreed on, and then deduct desk fees, printing.
Right. So again, in the normal case, all the money goes to the broker and then the broker pays the agent, right? If the situation is such that the title company is paying the agent directly before the broker sees the money,
yeah,
right. But let's just say that it was,
okay.
Then usually the broker is going to let the title company know, here's the net amount to pay the agent because we have other expenses to recoup, right? Because a lot of times it'll be insurance. So either way, at some point you're recording this payment to the agent, right? Which in this example was this payment of $48,000. So a lot of brokers I've seen charge just some kind of a flat fee. It could be like $250, right? So it's just going to be minus $250 right off the same expense. We'll call it some fee reimbursement, right, as the category. And obviously, normally it's whatever's being reimbursed, you might just book that. Although I like to put these things in the income section and then they're offset by the corresponding expenses that got paid. I just like that better. I think it keeps it cleaner. And this way you can even have just like a generic reimbursed expenses income account for this. right? And I don't care, I'll just call that service or fee income. It doesn't matter. So the point is, it's pretty straightforward at that point. You're just going to record their check for the gross amount because this is what they're getting 1099 for. And then you record the deductions, so the net amount of the check gets reduced by anything that's being deducted from the agent. So whatever's being deducted at that point doesn't, doesn't really matter. It's just as long as it's being deducted, this is what you take away here. There could, sometimes it's insurance, right? So over here, I might call it whatever broker fee,
insurance. Yeah.
right? And then over here, we might do insurance. And I can book it to the same account. I don't really care necessarily. And then, but then I'll put it in the description, and over here, whatever I'm recouping for insurance, maybe it's $125, something like that, right? And so when I save and close this, I still show the 48,000 as the cost of goods sold, that amount associated with the agent. If we go back to the profit and loss, right? Notice it comes up here as 375 because this is what I got reimbursed. But this you wouldn't necessarily want associated with the deal, right? Because this is just a fee that's coming out that's being reimbursed, unless you had the corresponding expenses also associated with this deal. Then you would make sure both got tied into that particular customer, right? Now, in this case, I'm just running the whole P&L, so you're seeing it there. But if I filtered this for just 123 Main Street, here's what that's going to look like. Right, so that goes away now. So we still show for the deal, we earned 60, we paid 48, right? So we netted 12,000 on this deal. But then when I run my whole P&L without that filter on it, I'm seeing the whole picture. And again, somewhere in the expenses would be the insurance that I paid, but usually it doesn't work out that straightforward because I might be paying like a $6,000 insurance premium, and I'm just coming up with some generic amount that I'm billing back to the agents every time they have a deal for insurance. In other words, it's not necessarily lined up or matched up one for one, which is another reason why I prefer to put the fee reimbursements in their own category in the income section, right? Because it's offsetting expense, but I don't know if it's not offsetting that expense exactly. It's just a theoretical charge that I'm hitting them with to reimburse my other costs so that I'm not out of pocket, especially when I'm paying them 80% of the whole commission, right? So, but that's how you do it, is you simply, add it in as a negative line item on the check that you record to the agent. So that's not unlike what stuff we've seen elsewhere.
Yeah, that's exactly how I'm doing it. I just didn't know if you had any other tricks, or sometimes you do things with a flair that adds things to it, but no, that's exactly what we're doing. So that's good.
And the only, if anything, the only thing that might be tricky or not straightforward is the fact that I don't tag the customer on these line items, right? Because I don't.
And you wouldn't, because it's not related to the customer. It's related to the agent. Yeah.
Exactly. So I might create some generic customer here just to put it in a different bucket.
Mm-hmm.
You might even create a customer called reimbursed expenses. I don't know. So at some point I'd be curious to compare the reimbursements that I'm getting with the corresponding expenses to see, am I overcharging the agents? Am I undercharging them? Right? Because if I'm undercharging them, the amount by which I'm undercharging is effectively eating into my share of the commissions. Right? So if anything, at some point I'd want to sort of reconcile that and make sure that I'm getting back at least as much as it's costing me.
For my clients, this is mostly used with E&O insurance. That's
right.
where I'm seeing that. Yeah.
Yep.
Great.
Okay. Anybody else? Right then. We'll keep it short today.
Awesome. See most of you tomorrow, probably.
Yep. I'll see you all tomorrow or Friday. Friday, I'm going to be showing you a cool alternative to Microsoft's Wunderlist. We talked about it a little bit already, ZenKit to do. And today, Microsoft officially announced that you have till like May 6th to move any Wunderlist stuff that you have over to Microsoft to do. But I looked at Microsoft to do. It looks terrible. So anyway, I'll show a bit of that on Friday, and I'll show you the differences. And that's it. So I'll see you all around.